to the scene, it's your host TTP. We're flying high in the crypto sky, it's you and me. From Bitcoin rush to Ethereum, we traded all the coins with the Trading Parrot, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick, Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game, with the vernacular, spectacular. From the morning to the night, we're streaming with the light from the Trading Parrot. We'll teach you how to fight, dive into the charts. The RSI liquidity at a glance, trends on the rise. We never leave it up to chance. All trading Ganium, tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with a vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the Trading Parrot. We'll teach you how to fight, dive into the charts.
Hello guys, welcome to the Trading Parrot. We are once again here live in the stream. This time I'm with Matt from Look Into Bitcoin, and I asked him to join me, but he's been very busy in the past weeks. But I'm very glad that we finally meet because I have so many questions about on-chain data. Look Into Bitcoin, by the way, is a platform that shows the vast majority of the value is for free. I really invite you to have a look at lookintobitcoin.com, and you can find most of the charts that we're going to talk about today with Matt for free. So how are you doing today, Matt?
I'm very well, thank you. How are you doing?
I'm very good. I'm happy to see some sunlight in this area of UK today.
Just a few blue bits of sky. It's beautiful. Something I haven't seen in weeks, but yeah. It's good. And that intro was amazing. I can't believe it. That was so cool.
I mean, some people love it and many people hate it as well. I just did it because it's fun. With all these things from AI, now you can make an intro talking about crypto and bots. And it's so funny. Every time I hear it, I have a little bit of a laugh. I wanted to ask you a question, Matt, and this is a burning question for a long time. I'm using very specific indicators from Look Into Bitcoin, but I always appreciate your opinion in opening my mind and showing me new indicators that I never considered that could also bring some value. And the question is, currently the market, I'm very intrigued. You know, I'm actually puzzled as well with all the things that we have bearish signals and bullish signals. But if you were to pick 5 indicators from the whole Look Into Bitcoin platform right now to help you drive better the market, which ones would you choose, and what direction are they telling you we are going next?
Tough question, pinning it down to 5. Off the top of my head, I think I've got 5 we can go through. I think we've got 5. I won't say if they're all pointing bullish or bearish yet. I think we'll go through them. Some of them have a little bit mixed signals. Some of them are definitely a little bit more influential now. Some are a little bit more, maybe going to take a few weeks and months to play out. But we can go through everything and kind of see what conclusion we come to.
Oh, let's have a look.
I'm just going to try sharing stream.
Yep.
Okay. Let me know how that looks.
Yeah, that looks perfect.
Great. So first and foremost, I think we should start by saying everyone seems to have lost their mind recently over a month where we're down 3.5%. I understand it can be a little bit emotional when you're seeing the value of your capital decreasing, and especially if you're a little bit maybe overexposed to altcoins and other smaller market cap cryptocurrencies. But realistically, we're still 53, nearly 54% up for the year. We've just had the Bitcoin halving event. We kind of expected a bit of a sideways summer, a little bit of decreasing volatility and boring, choppy price action. But man, the sentiment you see on social media is crazy over the past few weeks. People
True.
calling for the end of the bull market, calling for a retracement down to 40, 30. I've seen people saying 20K retest. We're down 3.5%. For Bitcoin, this is a nothing move. I think as long as we're between that kind of 70 and 60K range, which we've been in for, well, like 3 months now, I don't think there's anything we need to be overreacting to. I think if we break beneath that convincingly, maybe we need to have a bit more of an appreciation for some more downwards price action as a possibility. But there's an equal chance, if not a greater chance, we break upwards, which in that case we continue the bull cycle. So I wanted to start with that, but I think one of the first ones we should look at is the US M2 money supply versus Bitcoin. And the US M2 money supply is the current amount of circulating cash or cash equivalents in the US economy. And for the first time in over a year, we have seen this turn positive. So it was a big meme during COVID that the money printers are going brr, and you can see over here the year-on-year increase in this M2 money supply went, well, pretty much parabolic. And during that period of time, we saw the Bitcoin price increase exponentially also. Once this started decreasing very rapidly, coincided quite nicely with the Bitcoin bear cycle. And now we've actually seen this turn positive. It's a little bit of a good indication, at least in my opinion, that we're starting to see some new liquidity coming into the markets. It's not an immediate impact. It may take a few weeks, few months maybe, but the fact that we've kind of transitioned, we've shifted into this more quantitative easing mindset in major economies when previously we were in a quantitative tightening mindset, gives me some confidence long term that as long as the fiat supply is increasing, then the fiat demand will be decreasing, and people look for alternative assets historically.
What's the one below?
This is the Bitcoin year-on-year change.
Oh, I see.
So I like to look at the year-on-year charts. We do have just the versus charts for the US M2 versus just the Bitcoin, but I think the year-on-year charts give a better insight into the actual bear markets, bull cycles. They really come a little bit clearer. And especially if we look at something like the global M2. So not just US, we have to remember that while the US has a great influence on all markets, Bitcoin's a global asset. I will go on the year-on-year chart just so we can see kind of the difference here. So this is just global M2 versus BTC. And we can see this has been on a bit of an uptrend as Bitcoin's price was increasing. And over the past couple of months, this has been on a little bit of a downtrend, again, coinciding with the Bitcoin price decreasing. But as we're seeing a shift in US markets, in my opinion, we're more than likely to see a shift in other economies as well into, like we said, quantitative easing, money supply increasing, money printers going brr. And during those periods of time, we see Bitcoin do exceptionally well. So definitely one chart I'm going to be watching over the next few weeks and months. Like I said, we're only seeing the first indications yet, and this usually takes a decent amount of time to play out. We see these big cyclical trends, and it's not like Bitcoin's reacting like immediately to a change in this, but just looking at this, we've had a temporary pullback in this and in Bitcoin. Realistically, we're still very much trending to the upside.
Yep, that looks good.
So that's number one chart. That's kind of to the US M2 and the global M2, but both of those, not so much short term, but I would say medium and definitely long term, are currently pointing towards bullish. Second one, I'm going to go to the short term holder realized price, which has been a great metric throughout pretty much every bull cycle as a great area to reaccumulate BTC. Now, this is looking at the average entry price of all new market participants. So if I just look through 2016 into 2017 during this bull cycle, we can see practically every single time Bitcoin came down and retested this line, pretty much the break-even price for all new market capital, we can see Bitcoin price rebounded pretty much immediately and very aggressively as well. And that's not just isolated in that bull cycle. If we look into our current bull cycle as well, apart from a little bit of a more sustained dip we had in the tail end of last year, realistically, every time we've touched this recently, we have bounced off it quite aggressively again. And at the minute, we're hovering just above this, which is at about 64, pretty much bang on $64,000. So maybe Bitcoin does have another $1,000 or so to move to the downside. Maybe we bounce from here as people try to front run that. Maybe we dip slightly beneath that. But ultimately, I think this is going to be a strong level of support to watch over the coming days and weeks for Bitcoin. So again, I think that one's pointing more bullish than bearish. It does indicate that maybe we have a little bit of downside before we actually reach this level. But
And
throughout all of Bitcoin's history, this has just been a great area to buy.
And in order to understand the point of break from the point of view of the short-term holder realized price, can you show us when we enter in a bear market, how does it look? Does the price need to go way below the short-term holder price, or?
Yeah, so I mean, almost how in a bull cycle we should reaccumulate once we retest this level. During a bear cycle, we see these as great areas to potentially take additional profit or maybe even short the market. But we can see it's been a great resistance throughout all Bitcoin bear cycles as well. In terms of actually defining when we're at the bottom of a bear cycle or at the top of a bull cycle, the short-term holders, in terms of their current break-even price in relation to the Bitcoin price, I wouldn't say is the best metric. For something like that, we'd look to the MVRV-Z, which is looking at the entire Bitcoin cost basis. So not just short-term holders, but long-term holders, every Bitcoin market participant, and then looking at that in relation to the Bitcoin market cap and its volatility. And from that, we can see, again, we're not even close to overheated market conditions. It's called the Bitcoin bottom perfectly throughout every cycle. And actually, you can see I've already drawn it on the chart here. We recently retraced from a level where historically we always retrace. In previous cycles in 2016, 17, if I drew this further back as well, we'd see we bounced in earlier cycles. And then here in 2020, 2021, we also had a little bit of support and resistance off this line. So about this 3 level on the MVRV-Z typically gives us a little bit of either pullback if we jump up to it, or maybe a little bit of support if we bounce back down towards it. And recently, this dip we've had, again, we set a new all-time high. We had the Bitcoin halving event, and now we've seen this retrace a little bit. This is something, again, we see in this stage of a bull cycle quite typically. It's not abnormal to have this type of price action after the price action we saw leading up to this. We went pretty much parabolic for a year straight, had the halving event, new all-time high, and the fact that we're only down kind of 10% from that, I mean, really, we're in a great position. I think people, again, are maybe just getting... Honestly, I think a lot of it's boredom. I think when we see Bitcoin price action going sideways and chopping people out, people, I'm longing from 60K, and then they get wicked out. I'm shorting from 70K, and they get wicked out of their positions. I think these periods of price action really exist just to chop lots of traders, lots of leverage, lots of liquidity out of the market until we can build a solid foundation to really move exponentially higher.
Yeah, and one of the things that we need to take in consideration is that in the previous bull market, there wasn't a blow off top. Everybody got caught off guard with that topic because everybody was repeating, the blow off top, the blow off top, the blow off top. And then there wasn't blow off top. And one of the reasons that people speculate why that happened is because of COVID. It kind of shifted the whole cycle one level down. But as a consequence of that, our point of reference, when we use the previous bull market, we see that the top is lower. So it's kind of pointing, if we focus on the same chart that you're using, if you connect the top of 2017 in terms of MVRV.
Oh, yeah, hang on.
So connecting a trend line from the top of that orange MVRV to the top. Yeah, exactly. So the thing that it gets scary is that we are getting so close to that trend line there. But if we take in consideration that the previous top got diminished extensively because of COVID being pulled down by a full level of Fibonacci, if you want, potentially, if we break above this trend line, we could have way more than expected this time if we manage to get above that line, in my opinion, just humble opinion.
Yeah, I mean, the thing is with this, last cycle was a bit of an anomaly, especially because it was a double top. But then we also had this almost echo bubble. I've seen a few people refer to it, where we ran up from the bottom up to 14K, and then the COVID dump happened pretty much down to 3K again. So it was a really peculiar cycle. At the minute, we're actually looking a lot more similar to that 15, 16 cycle, where we have this slow grind up before potentially a blow off top, sorry. And the minute we're actually looking, if I zoom in, the previous, wrong button again. The previous halving in 2016 occurred around here. And then after that, again, we had months where price just did nothing. I think the halving was about here. So we had this big run up before, bit of a sell the news event, and then price just did nothing for 6 months. People need to be prepared for that to happen again this cycle. Again, this isn't abnormal to have very boring price action following a Bitcoin halving event. And similar to the, because I've seen a few people making this argument of the peaks getting lower and lower and lower, but no one really acknowledges the fact that in the previous cycle, if we were to draw a trend line like this, you know, it was
Sure.
kind of irrelevant because 2017 had paid absolutely no respect to that trend line. So I personally don't think something like this is going to happen where we kind of reach this and maybe top out down here, just because I think this previous cycle kind of warped data somewhat. And I know looking at on-chain, you can't say, oh, well, blame the data. But in that instance, the data isn't so clean. And personally, I think unless we have a huge retracement from where we currently sit, it, you know, $60,000, $70,000, similar to what we had in the previous cycle where we had the big run up to 14K, the big dump to 3 or 4K, unless we see something like that, to me, I think we need to acknowledge that playing out similar to 2017 is probably our most likely outcome currently.
Sure. And I wanted to show you a specific chart that I have. I think I've been looking into this specific chart for quite a long time. And I showed it in the previous stream earlier today. And it's one of my sources of concern at the moment. I know this chart is already available, the same one on Look Into Bitcoin website. If not the same, maybe very similar. This one is looking into the number of unique addresses that appear for the first time in a transaction of the native coin in the network. I don't know why we don't have a shorter name for that.
They
But
couldn't have picked a longer name. Jeez.
yeah, we need an acronym or something. But if you look at just the data, it looks like this all over the place. But then if you put a 30-day moving average in a yearly moving average, you get this effect. And as you approach a top of a market, you can see that it's constantly increasing, at least in average, right? So you get new adoption and new people opening a wallet and using it to do transactions. And on the blow of top, you see this point where you reach a maximum. All the people are getting attracted into this new thing, Bitcoin, that is making an all-time high, 20K. Let's create a wallet and let's deposit. And right there, it comes back down and everybody says, okay, no more opening wallets. That was a top or whatever. You enter the bear market and then you restart the same cycle, which is new people coming into a top and then back into bear market. And where are we now? Well, it's very weird because since there was the ETF going live and we have this pullback here, and then the adoption went very low. It actually retraced already 53% of in terms of adoption. In this one here retraced 37. This one here in the bear market retraced 55. So how can we afford to have 53% dump in terms of adoption in the middle of a bull market right next to a top if it's not a top? So this is an open question. It's not like I'm implying this is the top of the market. Of course, that's one option. It must have some probability, but in fact, the fact that we have the ETF and a lot of people are driving this price higher because of the ETFs, and the ETFs are not necessarily creating a new wallet every time a new institution wants to invest, could be one of the reasons why this is coming down. You know, the perfect explanation of retail is not here. This is just ETFs buying, and they might have maybe 10 wallets, maybe 100 wallets, and that's it. And all that flow goes into those wallets. So therefore, there are no new addresses and no new transactions. What is your take on that?
So good question. I actually, we do have the same chart on Look Into Bitcoin, and it is somewhat alarming, I would say. I have the same 30-day and 365-day moving average open, and that 30-day moving average of active addresses is the same level it was in the bottom of the 2018-2019 bear market. So incredibly low. There's almost no new users coming in and using native Bitcoin. But that's where I think the asterisk is, whereas people aren't coming in and using native Bitcoin. Like you said, I think a lot of the new capital coming in, especially the capital that drove us from 30, 40K when the ETF was announced up to 74K, a lot of that capital probably went in through these institutional routes, through ETFs and other derivatives. So I think that is definitely one element. I think the second element is right now, because where we are in the bull cycle, where there hasn't been a huge amount of M2 money coming in, there hasn't been a huge amount of new liquidity coming in. I think a lot of people already within the crypto space are looking to kind of gamble on smaller market cap things. So I think a lot of the interest we'd have previously had in earlier cycles, where people maybe first hear about crypto, they buy a bit of Bitcoin, they maybe buy a little bit of Ethereum or something. Whereas now, a lot of the people involved in crypto, have been involved for a few years now. A lot of people that may have gone into crypto previously, maybe now waiting for a little bit more confirmation of a bull cycle. Maybe they got burnt before. So the people currently in the markets are probably looking towards these, meme coins, these tiny market cap things, just to gamble, to try and get these exponential returns. Maybe they got into the Bitcoin market a little bit too late. So I think until maybe Bitcoin starts making new all-time highs again, because we did get a little bit of a spike up after the ETF. We did get a little bit of a bullish bump up in new users coming into the market and new capital entering the market. But especially now we've had a bit of a boring price action. I think people would rather gamble on other things, or maybe they don't want to go the route of holding their own crypto. Maybe they think now that there's other options available, there are these ETFs, there are these other derivatives, maybe that's just a simpler option for people to invest in than buying native Bitcoin.
But the question is, I mean, if you have a way to look into the profits from miners, because my concern is if you get less adoption in the actual blockchain. I'm not talking about buying just Bitcoin, but also transacting it and movements of paying high fees to the miners so they remain profitable. So my concern is, first, you have the halving. That's a big hit for them. We're having the capitulation of miners, and we have the recovery signal in the hash ribbons yesterday. I think it was that it was signaling recovery or recovered or something like that, which is positive. But I'm wondering how much in pain they are, additional with the fact that most of the flow goes via ETF into Bitcoin rather than lots of microtransactions in the Bitcoin network, which are obviously very profitable for them and keep them interested in being miners and keeps Bitcoin existing.
So 2 points to that. I think miners, I know we had, so this was going to be my other bullish chart. If we go to the hash ribbons here, we can see that I actually have just crossed above these hash ribbon signals, which is just a 30 and a 60-day moving average of the hash rate. Historically has been a great Bitcoin buy signal. So that was leaning bullish. But back to your point in terms of miner earnings, we can actually look at the Puel multiple, which is looking at today's miner earnings compared to a yearly average. And we can see as this currently sits at 0.86, they're earning 86% of what they historically would have done over the past year. But this might be inflated a little bit because just prior to the halving, it reached 2.44. So they were earning nearly 2.5 times what they usually do. So I don't think miners are hurting too bad. We get periods down here in the bottom of bear cycles where it reaches 30%. Now, at that point, miners probably are struggling a little bit. But really, the main thing that's driving Bitcoin miner earnings is the Bitcoin price. It's not so much fees. I mean, that is definitely a part of it. But if we look here, this is the Bitcoin miner revenue in fees versus rewards. All of this blue area is the Bitcoin block rewards. So if the Bitcoin price is increasing, that makes up an astronomical portion of their earnings, whereas the fees are actually pretty minimal. So if we see a huge movement of new capital coming into the market via ETFs, so they're not actually moving Bitcoin on chain, they're not paying these network fees, I don't think miners are going to suffer too much, especially if we see the Bitcoin price continue to increase like it has over the past couple of years. Makes
sense. That leaves me a little bit more ease with this topic. And another question is, can you, access somehow, or have you heard anyone having access to the actual wallets that are being used to custody the Bitcoin in the spot ETFs, specifically the spot ones?
No, I've not seen anyone figure out the wallets individually to kind of track that movement. I know with them being ETFs, they have to announce the inflows and the total holdings and everything. So I've seen a few sources where we can see the actual daily inflows and outflows. I'm sure you see it on Twitter and stuff, people saying, you know, a billion of inflows this week or something. But no, I've not seen anyone actually track the individual BlackRock Bitcoin wallets or anything.
Because I think it will be very interesting if those went public. I know that there must be rules and regulations in US when it comes to ETFs, that they have to declare how much the money is, the inflows, the outflows, and on a daily basis and all that stuff. But I wonder how much they can, and this is a burning question I have for at least a month, and I'm trying to find someone that knows. How much do they have um, freedom to, freedom to decide when to actually buy? There's the cash coming in, it sits down there, and they have like up to 1 day to materialize that in buy that Bitcoin? Or do they have like a lot of Bitcoin and they don't do any movement, and they have some room there to minimize what they do? How much optimization can they do in manipulation? Because you see the inflows, and sometimes it leaves you scratching your head. You say, well, we have 4 or 5 days of buying, big buyers, and what's the price doing? Okay, and people say, well, some people are buying, some people are selling, and it's compensating. Sure, but can it always be like that? I would like to see the price reacting to this inflows and outflows, and sometimes it reacts the opposite. It's just weird. So it leaves me hanging. There must be some manipulation or some room for deciding how to do the things. And one day we are going to find those wallets.
One day. Yeah, it's one of those. I think everyone can speculate a little bit. I've heard rumors that they were kind of scaling in down here in preparation of the ETF approval because they maybe already knew a little bit. So we're actually already accumulating Bitcoin on the cheap. I've heard conspiracies that a lot of the Lost Mt. Gox coins were scooped up OTC and a lot of the FTX deals and stuff. But who knows? I'm sure over the next few months, it's going to become a little bit more apparent, their actual strategy. I don't know if maybe literally at the end of every day, they're actually, having to buy spot BTC. I have no idea. But yeah, I think once we can actually track those wallets and get a bit of a better understanding of how they're accumulating and distributing, at that point, maybe we can, play along with the institutions and whales a little bit easier. And as soon as that data becomes available, we'll try and get it on site. And that way, we're not just trading with the whales, but we're actually trading with BlackRock and other huge institutions.
And another question, completely unrelated, but which month do you expect to be the most likely turning point for the price? And I'm talking turning point to exit this range, if from below or from above. But I'm sick and tired of 60 to 70. It's just 100 days being an influencer, talking up and down.
It's hard, yeah.
I was telling my wife, I don't know how can I get new ideas. It's just 60, 70 every day.
Yeah. Typically, we don't see sideways last more than like 3, 4, maybe 5 months. So if we look to like the bottom of the 2018, 2019 bear cycle, and actually the few months before we had this big dump, I remember this period of price action just being so boring. And that was September, the start of September to the end of November. So about 3 months. Down here, we had kind of early December all the way until April, really. So again, 3, 4 months. So if you look throughout Bitcoin's history, it's rare that it lasts more than kind of what we're already seeing. So given the fact that we are in the summer months and typically we do have, I don't want to say an underperformance through the summer months because there's loads of examples where we had very positive price action throughout summer. But I think usually we have less volatility. There's less liquidity, less inflows. Genuinely, I think people just spending less time in front of their screens, going out on holiday, not in England, enjoying the sunshine somewhere. in those periods of time, we typically do see a little bit more boring price action. So it wouldn't surprise me if we didn't see like a convincing break until maybe September as a late date. It wouldn't surprise me if we saw something maybe a bit later this month if we saw a bit of a downwards move. But really, I think my base case would be like a more boring July, still a bit more of a boring August, and then maybe September is when we start to kick it up a gear. Maybe, as we're getting towards the end of the year into Q4, typically we have a very bullish Q4 for Bitcoin. So maybe at that point in time, we see a bit of a break of this range, which hopefully by that point, we haven't lost our sanity.
And when we were recently at 72K, did you notice as well the amount of inflows to exchanges? Like I have alerts set up on Telegram from CryptoQuant, and I follow Crypto Whales and all these different Twitter accounts. And it just became like almost once an hour, we were getting inflows for over 100 million, sometimes a lot more. And that was happening at the same time we were testing that 72K. That was a critical level. So two questions: do you have that information as well in looking to Bitcoin? And that takes to the next question, which is if you can mention your key levels to break bullish, and key levels that could cause us to lose the 60K lower range.
Yeah, of course. So one thing I've been watching recently is the spend output profit ratio. And this allows us to actually see the level of profit taking or capitulation in the market. And once we get these huge spikes to the upside, it indicates that a lot of people are taking profit on their position and they've made a huge amount of profit based on when they purchased their BTC. So we could see a fair amount of profit taking place on the way up to the new all-time high that we set, which was maybe another indication that we're about to see a little bit of a longer term retracement. And then this big spike was actually from the Mt. Gox BTC being moved to a new wallet, about 140,000 Bitcoin moved in one transaction. So again, that was warped somewhat. But we haven't actually seen a sustained period like we usually see at all-time highs around these levels. So maybe it was people sending coins to exchange in preparation of selling. Who knows? But I think from a purely on-chain perspective, we're not seeing indications that that was the top in terms of whales dumping all their coins and now retailers scooping up before we see this big drawn-out bear cycle. Everything kind of points towards this just being a post-halving, post-new all-time high, slight retrace, bit of summer sideways, choppy price action.
Cool. And in terms of levels
in
hold
terms of levels.
Yeah.
So like we discussed before, the short-term holder realized price, I think, is going to be a great one to watch over the coming days and weeks, which is currently sat at 64,000.
Mm-hmm.
This is a great on-chain level to watch, but obviously we can see many examples where even though we bounced from this, we did dip beneath temporarily. So I think really the big psychological number of 60K. I remember last time we were on stream, I think we had pretty much the exact same conversation. And I was saying that I think 60K is a pretty strong level of support. I do think maybe that level has been weakened. I think when we last streamed, we were around here. We dipped beneath temporarily and bounced back over 70K. But usually the more times a level is tested as support, the more likely it is to break. More times resistance is tested, the more likely it is to break. So maybe if we rebound off 60K and don't see a convincing, bounce back up above 64, 65K, then maybe that gives a little bit more of a bearish indication that we could break through, at which point I'd probably look to 55K really just as a technical level to watch. So that's 64, next 60, and then 55 would be my three downside levels to be watching and accumulating at. And then above that, really, I think 70K still stands as a big psychological level. And then above that, really, it's the all-time high. Once we start breaking new all-time highs again, I think very quickly sentiment changes from like the despair we seem to be seeing at the minute to overwhelming euphoria and greed that we'll inevitably see.
Yeah. So for me, the next level to break, the line in the sand, has been 71.5. And luckily for me, every time that we get there, we get rejected. So I don't have to, jump in and rush into a terrible trade. So every time we get to 71.5, the rejection is extremely obvious. There hasn't been even a liquidity hunt. So we haven't been out of range and then back into the range. We just test resistance and get rejected straight away. And prior to approaching that resistance, my Telegram starts showing inflows like crazy. And of course, as you said, not all those inflows are execute as a market sell. Sometimes they just keep it there in the exchange in preparation for higher prices. But it's kind of a warning sign whenever we are approaching that level that, well, they might pull the trigger and dump them on me right after I enter my big long after breaking 72.
Yeah, but two things from that. A lot of these people could be maybe selling their BTC, but then converting it into one of these ETFs again, so they're not having to self-custody their wallet. Maybe there's some tax incentives in doing so. And secondly, if we are seeing a huge amount of sell pressure once we reach this upper level here, really, if we're seeing a huge amount of sell pressure and all it's done is send us down 3.5%, I'm not going to say that that's an incredibly bearish thing. Once we see people start selling and we see price really rapidly dumping, we see this cascade down, maybe wiping out all of the long leverage long positions, and we're getting this liquidation downward spiral. At that point, it's a little bit more concerning. But I'm not really tracking the exchange inflows and outflows too much. If we are seeing those and seeing maybe a little bit of realized profit on those larger positions, and it's still not having a massive negative impact on the market, that gives me confidence that maybe we're in a bit of a stronger position. And what I've done here is just draw on a wedge. I don't really trade these wedges in terms of buying them as a moving level of support and resistance, but just in terms of visualizing volatility, I think they're very useful, because at some point, if we imagine just a coil being sprung here, at some point, this gives us a huge amount of energy to move to the upside or the downside. So at some point, I think once we do break out of this range that we've been in, it's probably not going to be a nice, gentle grind upwards or downwards. It's probably going to be quite a violent move to the upside or downside, where maybe we could see a $5,000 or even $10,000 candle in a day or two. So I think for now, again, it's not the most interesting period of time, but I think we need to be ready to take action, because once something does happen, it's probably going to be quite rapid.
Yeah. And actually, when you observe, for example, what's going on with the rest of the markets, you can see the S&P and Nasdaq are going just mental, parabolic, and crypto is just lagging behind. And what's your opinion? Why you think this is happening? Is all the people just in an exodus from crypto and going into traditional markets, or is this some sort of oscillation that they might come back once they fear that they are missing out?
It's a tough one to say, really, because historically Bitcoin has actually been a little bit of an earlier signal in terms of what the next move in the S&P might be. So, for example, once we saw like the COVID dump here, Bitcoin actually acted just a few days before. Once we had a top on the all-time high here and had a big dump, the S&P continued before dumping a couple of weeks after. And once Bitcoin bottomed and started rallying, it kind of happened just prior to the S&P. So the fact that we're seeing this huge divergence in price action between Bitcoin and traditional markets is a slight concern that maybe if we see the S&P start dump, we're going to see a deeper retracement in Bitcoin, given their historic correlation. But maybe this is a sign that we shouldn't really be too worried about this short-term Bitcoin move, because other markets are incredibly bullish. This is just a slight retracement before the S&P drags Bitcoin substantially higher. One thing I've noticed is capital typically flows from safe haven assets like bonds into indexes like the S&P, into big tech stocks like NVIDIA. Then maybe we see Bitcoin and then Ethereum and smaller altcoins. So we do see this flow of capital into more and more speculative assets. And the fact that we've seen, huge bullish momentum in the S&P 500 gives me a little bit of confidence that if we just see a cool off in the S&P, that capital is going to want to flow into the next asset and the next asset. So maybe that is the actual fuel that gives Bitcoin and subsequently other coins that next move higher.
Yeah. One thing to note is that in the past 2 years, we've been seeing S&P and Nasdaq performing pretty well. Actually, we see so many all-time highs in the same year. But one of the signs of concern from people on Twitter is that only 30% of the stocks in the S&P are driving the price higher. Only 30%. the rest of the stocks are actually going lower, and that has been happening consistently for the past 2 years. And the concern is because the last time that that happened for 2 years in a row was before the 2000 bubble. So they've been comparing these two things. I'm not trying to call the top on the S&P. I mean, how can I call the top on the S&P? It's too many aspects to consider, but it's one of those sources of concern that keep me thinking, for how long 30% of the stocks can continue driving the whole market higher.
Yeah, it's one of those where I've seen so many people be overwhelmingly bearish and predicting the next great recession in pretty much all global economies. And in the meantime, we've seen stock prices rally parabolically to the upside. And I think two things really. One, this doesn't necessarily reflect the economy. So a lot of people are worried because, especially, we've seen a treasury yield inversion and we're seeing more hawkish pivots in economic policies potentially. We're seeing historic examples where the S&P is following patterns we had previously that led to big recessions, etc. But really, the price is going up massively doesn't necessarily indicate that the economy is in a great position. If prices going down massively doesn't indicate that the economy is in a terrible position. I think that these are two different things: the health of economy and the S&P 500 or any other big global index. So that's one thing. Secondly, I think a lot of the time people try and, like we said, predict things. Whereas for me, I think the price tells us everything we need to know. I think people that maybe tried to big brain the market and take profit down here based on, this signal or that signal, they've missed out on some of the best years of returns that we've seen. So I'm personally not one that takes too much fundamentals into account. I'll look at the data, like the liquidity supply, because I do think that has a big outcome. But as soon as people start telling me that, this is happening or this is happening in economies, so we're going to see a big retracement or a big recession, until I see the price reflect that, until I see buyers, not wanting to buy, and we see a bit of fear and capitulation in the market, and we actually see some selling, then that is a good indication to sell. But really, if price is going up, I'm just going to continue to watch price go up.
And what is your take on retail is not here? How do you explain that to yourself, that retail is still not interested at a price that already did an all-time high?
One thing I've seen, which is definitely a solid argument, is given the cost of living, given the inflation we've seen pretty much everywhere, that the amount of disposable income and savings that people have to invest is probably lower than it was, in 2020 when people were literally given free money, which is definitely going to be a factor in that. So retail are probably waiting for a moment where they feel it's not as risky. And typically retail feel an asset's not risky when it's reaching an all-time high, a cycle peak, because acting as a contrarian, as unnatural as it seems, is the way to outperform in the market. So the fact that, again, people, retail, seemingly are a bit hesitant to come in. I've not had, my taxi driver and old friends start messaging me now saying, oh, this Bitcoin thing looks great. That's the perfect counter indicator when people start texting me. I've not had that yet. So I think retail maybe have been burnt in previous cycles, so are a little bit more hesitant to come in this time. Maybe it's the cost of living situation. Maybe they're not coming in because, like we could see with the ETFs and maybe even stocks like Coinbase and MicroStrategy, they can just gain exposure to the crypto markets through other means that don't necessarily allow us to see this market activity so easily.
Yeah. And my take on that as well, I agree with what you're saying, actually. But additional to that, the people that join in the bear market, or not in the bear market, but halfway during this bull market, they jump into the space and they went straight for meme coins, shit coins, and all this chasing things that are going higher. And not just that, sometimes even the top 50 market cap of all coins. And what I'm seeing today in the charts, many of those altcoins have gone lower than the prices of December. So they have retraced all the profits in the past 6 months, which is crazy. And it's terrible advertising for the space at this level. But unfortunately, during post halving, and during that summer after the halving, typically the alts get wrecked. And this is not something I'm specifically myself tracking, because I look a lot into Bitcoin, but whenever I look, for example, into channels like Benjamin Cohen, that he keeps insisting, do not buy the alts yet, wait until the pivot, wait until there is some rate cuts, because in the past bull market, that was the turning point for the alts. The alts were looking bullish, but the people entered too early and they got wrecked. So that's why I keep this stance of, with alts, I try to be very quick in and out, because I'm all the time fearing that we are still in unstable scenario for alts. The risk on is not yet confirmed until we see some rate cuts, and until we see some positive news for the economy.
Yeah, 100%. And I think a lot of people, have maybe got a little bit too greedy too early speculating on these assets when a vast majority of things have underperformed BTC. Like we were saying before, when capital usually flows, so we see something like bonds into equities, my handwriting's not the best, into Bitcoin, into Ethereum, into shitcoins. And we've not seen the flow even into Ethereum yet. People are trying to jump a step and therefore are probably getting burnt. Obviously, there's loads of examples where people bought a meme coin, it did 100x and, they made loads of money. But 3 days later and it's down 99% or something. Until we see Bitcoin dominance, which I know Benjamin Cohen likes to talk about a lot, and I've mentioned on the channel a few times, until that starts topping out at 60%, until we see a sustained outperformance of Ethereum compared to Bitcoin, I don't really see any reason to be losing your Bitcoin, gambling away on speculative assets this early into a cycle. Alt seasons really only last a few months usually. And if we potentially have another year of Bitcoin continuing its bull cycle, do you really want to underperform for that long before you have this, 1 or 2 month period of alt season, which usually occurs after Bitcoin's topped out anyway? Unless someone wholeheartedly believes that Bitcoin has already topped out in this cycle, which doesn't look like it because we've not seen any capital inflows from Bitcoin into these smaller market caps for a sustained period of time anyway, then I don't really see the point in, losing that. And if we look on a longer term basis, Ethereum, the second largest crypto by market cap, in terms of its performance against Bitcoin, topped out in mid 2017, and then in the subsequent cycles never set a new all-time high against Bitcoin. So I'm not someone that's wholeheartedly against altcoins, but on a longer time horizon, nothing is going to outperform Bitcoin probably over the next kind of 5-10 years. So for me, I just like the simplicity of this, and if I were to gamble on some smaller market cap things, I definitely don't think now is the time to be doing so.
Mm-hmm, mm-hmm. Yeah, I agree. So for me, it's just quick swing in and out. Bitcoin is more for holding, but now I'm looking for a time to buy, and I think we are in agreement. The short-term holder 63 is a great point. You mentioned as well. 55 is your next level. Am I right? 55.
Yeah. So if I just go onto the chart here, I mean, I've not done this in a while, but I like to do 10-second TA. If it takes more than 10 seconds, then it's probably not too obvious. So I'd probably draw something about here, something about here, and then, here. So maybe a bit lower than 55K, maybe 52, 53K. And then 60K lines up with pretty much everyone's technical analysis. But then that's as easy as I would make it for downside targets. If we break this level, then I'd probably look to here, and then I'd look to here, and then upside, obviously, here, and then beyond that, we're kind of getting into the Fibonacci extensions and the on-chain targets based on the Cycle Master and other things. But I enjoy my time too much to spend, 10 hours a day in front of the chart. I kind of have to because of the work that I do. But really, if your TA, if your decision making is taking longer than a few minutes, then it's probably not clear and obvious. Think VAR. If it's not clear and obvious, then, take a step back. There's going to be better opportunities to come. And I think a lot of people are maybe fixated on, oh, well, I could have bought it at a slightly lower price. I could have bought it at a slightly lower price. But I think in terms of risk to reward. If I buy here, then that gives me, in my opinion, a good risk to reward where I can potentially scale out if we continue lower. But we're at a level where I think we could maybe have a rebound. Whereas some people might want to just, buy here and then buy here and then they're buying all the way down, trying to catch the bottom, when really they'd be much better waiting until we have, a bit of a reclaim, bit of a, bullish turning former support into resistance into support. And then once we start building these higher lows, high highs, etc., that's when things look good. And then you want to scale in on these pullbacks to levels of support. But I mean, really, if you zoom out, I don't understand how this is a bearish chart. Things look great in my opinion.
Yeah, I agree. Thanks so much for joining me today, Matt. We have covered so much information. I hope people are appreciating as well. We should do this more often. That's all I have to say.
Definitely.
So maybe we can do it in a couple of weeks or so. And let me know, guys, in the comments if you also enjoyed the live stream. Give us a like, and please go to lookintobitcoin.com website. You're gonna find plenty of value for free. Only a handful of charts are currently paid, but also have a look at their premium indicators as well. Thanks so much for joining, and looking forward to the next one. Matt, I'll see you